Hello everyone, I am CA Vibhuti Narang. Welcome to our channel Voxcov Academy. In today's video, we'll be continuing with our income tax series and covering the topic which is known as income tax rates. So today we are discussing about income tax rates for two financial year. One is financial year 2021, that is the relevant assessment year 21-22, and financial year 21-22 with respective assessment year 22-23. As there is no change in budget 22 in the income tax rates, so for both the financial years, same tax systems will be followed. Before moving to the today's topic, let's first understand what are the topics covered in today's video. So we'll be discussing the rates for individual, HUF, association of person, body of individual, artificial judicial person, along with that the partnership firm, NLP, local authority, then companies, cooperatives. Have two topics for extra coverage at the end of the video, so please stay tuned till the last. First of all, what is income tax rates? Income tax rates are the different rates for different categories of taxpayers and for the different types of income sources generated by the taxpayer or the assessee. In case of individual HUF, we have a simple slab rate system. Also for BOI, AOP and AJP also slab rate is followed. But for companies, partnership firm, LLPs and local authorities, we have a fixed tax rate system, that is irrespective of the amount of income earned, the tax rate is fixed in nature. Before moving, we'll first start the topic individual and HUF. Budget 20 has come up with a new tax regime which is applicable for individual and HUF, and there is also undergoing an old tax regime which is covering for three types of individual categories. One is which are below 60 years of age, second is which are above 60 years of age but below 80 years, and the third is the super senior citizens which are more than 80 years of age. So individual and HUF will enjoy the benefit for two types of tax regime, whichever is more beneficial that can be opted by them. So first we'll be understanding the old tax regime and then we'll understand the new tax regime. First of all, if I talk about the old one, or you can also say the existing slab rates which are applicable to individual who are below the age 60 years, also for Hindu undivided family, association of person, body of individual and artificial judicial person. So this slab rate is applicable for these five categories. The slab rate says as follows: if your income is ranging between 0 to 2,50,000, you do not have to pay any tax, which is nil, or you can say 0. If your income is ranging from 2,50,000 to 5 lakh rupees, your tax rate will be 5%. Income ranging from 5 lakh to 10 lakh, your tax rate is 20%. And income from more than 10 lakh and above, the rate is 30%. If I talk about senior citizens, that is 60 years and above of age, the slab rate is same, only the exemption limit is different. That is, if your income is up to 3 lakh, it is exempt, and from 3 lakh to 5 lakh, it is 5%. Above that, it is same, 5 lakh to 10 lakh 20%, and 10 lakh and above is 30%. Talking about super senior citizens which are 80 years and above, till 5 lakh 0, and from 5 lakh to 10 lakh same 20%, and 10 lakh and above 30%. So with the gap of ages, only the basic exemption limit is variating, further the tax rates are same. If I talk about the new tax regime which is applicable only to individual and HUF for all category of ages, so there is no bifurcation of ages in that. If your income is still 2,50,000, tax rate is 0. From 2,50,000 to 5 lakh, it is 5%. From 5 lakh to 7,50,000, it is 10%. From 750 to 10 lakh, 15%. 10 lakh to 12 lakh 15,000, 20%, and 12 lakh 50,000 to 15 lakh is 25%. 15 lakh and above is 30%. Maximum tax is again 30% only, but the difference is, earlier in the old tax regime, after 10 lakh, the tax rate becomes 30%, and in the new tax regime, after 15 lakh, the tax becomes 30%. Also, the difference have been stagnant, that is 2,50,000 is the slabs they have generated in this case, and the tax is rising directly by 5% at each slab rate. Now, first of all, this new tax regime has come up with a very nice slab rate, but there are some exemptions or deductions which are not allowed in this tax. These are some exhaustive list which is inclusive, you can say inclusive list which is there are many other deductions and exemptions which are not allowed. Some important I have just presented over here. One is the leave travel exemption given by your employer, then your standard deduction of 50,000, relocation allowance, chapter 60 deductions like ATC, ATD, ATTTA, etc. Children education allowance, daily expenses in the course of employment. You have helper allowance, special allowance, interest on housing loan, professional tax, HRA and conveyance allowance. So this is some examples which I have just provided. Otherwise, for in detail, if you want to analyze, it is section 115 BAC. So you can go to the relevant section and have a look to that also. Now the next important question is how to compute the slab rate. See, I'll just teach you for an example one slab rate, and this will apply for all other slab rates, and you can follow the same procedure to compute the tax applicable. If your income is ranging from 0 to 2,50,000, the tax is 0, so you don't have to do anything. If income is from 2,50,000 to 5 lakh, for example, the income is 4,50,000. So in that case, 5% of income, that is actual income you are earning, for example in my case 4,50,000 minus the the maximum limit of the earlier limit provided. So this is 2,50,000. So 2 lakh is the income generated above the slab rate. 5% of 2 lakh will be 10,000. The tax applicable is 5 lakh to 10 lakh is the slab rate. Then let's suppose my income is 8 lakh in this case. So it will be 20% of 8 lakh minus the higher limit of the earlier slab. So that is 5 lakh. So 3 lakh is the income in my case. 3 lakh into 20,000 will be 60,000 plus 12,500. How we got this figure? 12,500 is 5% of this limit difference, which is 2,50,000 into 5%. 12,500 is to be added for this slab rate, and the balance income is to be taxed at 20%. If it is 10 lakh and above, for example, my case example, it is 12 lakh. So 30% of 12 lakh minus 10 lakh, that is 2 lakh into 30%, 60,000 plus 1 lakh 12,500. So 12,500 was for this slab rate. For 5 lakh to 10 lakh, it is 5 lakh is the gap. 20% of 5 lakh is 1 lakh. So 1 lakh plus 12,500 plus 0. So it is 1 lakh 12,000. So this is how you have to compute the slab rate. Even if it is 3 lakh, so it will be difference will be 3 lakh to 5 lakh, 5% of the income minus 3 lakh it will be. So it will be 5% of 2 lakh. If I see, it is 5% of 2 lakh 10,000. So it will be 10,000 over here and 1 lakh 10,000 over here. So you can just make the changes accordingly depending upon whatever slab rate is applicable to the assessee. I just wanted to make a comparison, for example, between the old tax regime and the new tax regime. If the gross total income in old is 10 lakh, also in new tax regime is also 10 lakh. Deductions applicable are 1,50,000, but in new tax regime, no deductions are applicable. Net total income turns out to be 8,50,000 and 10 lakh. As per slab rate, the tax comes out to be 82,500 and 75,000. There is a fixed 4% health and education cess which is applicable in every type of tax rates applicable in Income Tax Act. So it is 4% of 82,500 and 4% of 75,000. Total tax turns out to be 85,800 and 78,000. So the assessee is more beneficial in the new tax regime because the tax is coming out to be less. Also, if you want to compare these, you can go to Income Tax India e-filing website. On the left side, quick link, there is an income tax calculator you can open. Enter the amount, enter the age of the assessee, and you can compare. It will give you the comparison, and it will also tell you which tax regime is better, whether the new one or the old one. So you can follow that practice also. Next, we will be understanding the rebate under section 87A. Rebate have certain concessions or certain conditions which are to be followed. The first is it is available only to the individual as well as resident. So means both should comply. He should be an individual and resident of India. Second, the total income should be up to rupees 5 lakh, not more than 5 lakh. The rebate, which is a discount on tax, is available up to rupees 12,500. That is not more than 12,500. Rebate is not available, but it cannot exceed your tax amount. For example, my income is 5 lakh and in second case it is 4,50,000. Tax comes out to be 12,500 and rebate will also be 12,500, which is the maximum rebate an assessee can claim. So net tax is tax minus rebate is equal to 0. In second case, 4,50,000, tax is 10,000, rebate is 10,000. So rebate cannot be 12,500 and 2,500 will not be a refund option. So the rebate cannot exceed your tax amount, but maximum rebate available is 12,500. In both the cases, your tax will be 0. It will not come out to be negative. Now we need to understand, as we have seen, we have a rebate for those who are in the lower income groups. In the higher end, if the income is on a very higher income group, we have a concept in income tax called surcharge, which is applicable for an income exceeding a particular limit. Before understanding the topic of surcharge or what are the rates applicable in this, the income which has been computed from capital gains under section 111A or 112A or dividend income, we have different type of taxes for surcharge, and other income beside these three incomes we have different types of surcharge rates applicable. Before understanding these type of surcharges, we need to understand what is 111A and 112A. See, these are type of short-term and long-term capital gains which are taxable at specified fixed rates. That means these 111A is a short-term capital gain and 112A is a long-term capital gain which is being taxable on the sale of a specified type of securities or units, and they are taxed at a very fixed rate. So in the later income tax videos we'll cover the capital gain topic. There in detail we'll understand this topic. As of now, you can understand this is a type of capital gain on which security transaction tax is also applicable. So moving further, up to 50 lakh you do not have any surcharge. If your income is falling for these three sections till 1 CR, it is 10%. From 1 CR to 2 CR, it is 15%, and any other slab rate above it is 15%, which is fixed. So it cannot be more than 15% if the income is from these three sources. Any other income beside these three sources, if your income is up to 50 lakh, it is 0. From 50 lakh to 1 CR, 10%. 1 CR to 2 CR, it is 15%. From 2 crore to 5 crore, 25%. 5 crore and above the income is there, then 37% is the surcharge. This is the maximum surcharge which is applicable in the case of individuals. Next, partnership firm and LLP. So the tax rate in this case is 30%, and the surcharge, which is total income when more than 1 CR, then it is 12%. Now we need to understand the tax rate of companies. So in case of companies, there are two types of companies. One is a domestic company and the other is a foreign company. In case of domestic company, there are different types of companies which are being made applicable in income tax right now. So there are different types of, these are not slab rates, these are different categories of companies. If you are falling in whichever category, that particular fixed tax rate is applicable on that company. So if you have opted for any of these three 115 section series, you have different slab rates or tax rates, and beside this you have different tax rates applicable. Before understanding what are these, we'll first understand what these sections are, just for a basic introduction. Rest we will have a corporate taxation topic video in which in detail we'll understand what are these sections. Talking about 115BA, this is the domestic company engaged in manufacturing production setup. Registration is done after 1st March 2016. So it has to be a domestic company which is engaged in manufacturing production and set up registered in India from after 1st of March 2016. Definitely it has many other benefits and concessions. That's why it is taxed at 25%. 115BAA. These are all domestic companies which are trying to register under this section. Tax rate is 22%. 115BAB are the domestic companies again engaged in manufacturing or production, set up or registered after 1st October 2019. So they enjoy a different slab rate, tax rate, which is 15%. Beside these three sections, if your company is having total turnover or gross receipts in the last to last financial year not exceeding 400 CR, then the tax rate is 25%. Now last to last financial year means, for example, in this video we are talking about two financial years. One is 2021 and another is 21-22. So for 2021, last financial year will be 19-20 and last to last financial year will be 18-19. So if the gross turnover or gross receipts are less than 400 CR in last to last financial year, then the tax rate is 25%. Otherwise, if these four categories are not applicable, any other domestic company flat tax rate is 30%. If I talk about surcharge, if they are opting for 115BAA or BAB, then the flat surcharge is 10% irrespective of income earned. In a sense, if their income is only 5 CR also, then also 10%, and if it is 5 lakh, then also a mandatory surcharge of 10% is applicable. If you have not opted for section 115BAA or BAB and your total income is up to rupees 1 CR, then it is 0. From 1 CR to 10 CR it is 7%, and 10 CR and above, that is 10 crore and above, surcharge applicable is 12%. Talking about foreign companies, any income tax rate is 40% and surcharge applicable is till 1 CR 0. From 1 CR to 10 CR it is 2%, and from 10 crore and above it is 5%. Now, tax rate for cooperative societies. As for domestic companies, there is a 115 series. Similarly, for cooperative society, there is a section called 115 BAD. So, if the cooperative societies get registered under this section, tax rate applicable is 22%. But if they have not opted for 115 BAD, then tax up to 10,000 of income generated is 10%. From 10,000 to 20,000, 20%. 20,000 and above is 30%. Surcharge is 12% in this case. Health and education cess. So whatever the income is generated and whatever tax or surcharge as the case may be is applicable on both the sums together of tax and surcharge, a health and education cess for the functioning of healthing system and the education system in India, 4% tax is being applicable mandatory on tax plus surcharge. For example, if my tax is 2 lakh and 10% surcharge is applicable on it, that is 20,000. On total tax plus surcharge, 4% health and education cess will be applicable, making the total income tax will be 2,28,800 rupees. Now, there are two extra coverage which I am taking topics which are quite very relevant with income tax rates only. First is rounding of income and tax. So whenever in income tax you are making any computation, and in that case your income as well as the tax should be rounded off to the nearest 10 number. So if your number, the last digit is 5 or more than 5, it will be rounded off to the next higher number. If it is 4 or less than 4, like 4, 3, 2 and 1, it will be rounded off to the lower number. For example, if your tax turns out to be 125 rupees, it will be rounded off to 130, 126 rupees rounding to 130, but 124, 123 rupees, then it will be rounded off to 120. So rounding off of income as well as the tax is important. The last concept which we are understanding for today's video is maximum marginal rate. So maximum marginal rate is the highest tax rate generally for assessment purposes, and sometime in TDS this term is come into existence. So I was just covering about a little bit on this. If it is individual HUF, AOP, BOI, in every case you have to take the highest tax rate, the highest surcharge which is applicable, and the 4% cess. The total which turns out to be will be the maximum marginal rate. For example, in case of individual HUF, BOI, AOP and AGP, your highest slab rate is 30%. 37% is the maximum surcharge. So 37% of 30 is 11.1. Total will be 41.1. Cess will be 4% of 41.1, it is 1.3. So total will be 42.74. For firm LLP, the highest tax rate is 30%, which is the flat tax rate. 12% surcharge of 30 is 3.6, total is 33.6, and 4% of 33.6 will be 34.94. Same for cooperative societies. Even for domestic companies, you can compute for 25%, 30%, 22%, whatever the case is. So this is just quite important. If you require, you can just note it down also. So whatever I covered in today's video is also available on my website www.voxcov.com. So if you want, you can register for practical training session on income tax or any other subject you want to register. You can register on the website. You can also follow Voxcov Academy on Facebook, Twitter as well as LinkedIn. Please subscribe to my channel for future updates and do like the video. People have doubt that they want to contact me, so they can contact me on the number provided on the screen. That is my WhatsApp number also. So if you have any queries, you can directly ping me over there. That's all for today's video. Have a good day. Bye bye. The topic covered in today's video is also available on my website www.voxcov.com. So if you want to register for any practical training sessions for GST, TDS, income tax, payroll, balance sheet finalization, you can just visit the website and enroll for the required course. Every course is available in basic and advanced medium. So as per your choice, you can just select the course and add to the cart for further payment. If you really like the video, then please press the black thumb below and subscribe to my channel for latest updates and notification. Thank you very much.